What's going on, guys? It's Kyle. Welcome to the Stocko YouTube channel. I'm very excited to do another update for you on the SoFi stock, guys. I got a lot of good news. I'm going to be answering some questions that you guys have, and we're going to be covering why SoFi stock is a rocket ship waiting to explode. There is so much upside that is not priced into this stock, and I'm going to continue to recommend my bullish call on this stock, and that is a triple. I expect $45 or higher going into the end of next year. As you can see here, we put SoFi stock at the top of YouTube, and we scroll over here to the vidIQ. Stocko is the top creator for the SoFi stock. So if you want that elite coverage covering the SoFi stock to get that in-depth analysis, be sure to subscribe to the channel now. And guys, right now, 64% of you guys are not following the channel. So if you don't have a YouTube account, be sure to make one and hit the bell notification. You will be notified as soon as I drop a video, so you don't get notified hours to a day later. Let's get into the video. Guys, take a look. The index is pretty red today. S&P 500 down, Dow down, NASDAQ barely green, Russell finished almost 1% down. And look at the SoFi stock, guys, up 4.49%. So this is the first question I want to address. Kyle, market is at all-time highs. What if the indexes really start tanking? Guys, you see it right here. It doesn't necessarily mean an individual stock is going to pull back with those indexes. I mean, these are pretty big drops on the S&P and the Dow along with the Russell, and we're still finishing green. So this is a very good sign that people are starting to understand the long-term growth opportunity with the SoFi stock right now. Guys, that 1 month chart, looks pretty rough since that, sell-off after that earnings report. But we've been continuing to bounce around strong support in the high 13s, low 14s. As you can see here, 1384, 1406, 1413, 1410. And we look at that 5-day chart. The 5-day chart looks really strong. You can see here on the 1-day chart, guys, we were breaking $16, 1613, around 10:50 a.m. So very good sign. And even that big move today, guys, almost 4.5%. We're still at a 12.6 billion market cap right now. There's massive upside when we look at these other fintech high growth plays. I'm still expecting a triple, guys. This is going to be a rocket in the making. A triple in the next 12 months can definitely happen. I'm looking for a price target anywhere higher than $45. You got to diamond hand this one through the volatility. And remember, guys, SoFi has not dropped any news in the past 3 months after the SPAC merger, guys. They are waiting for the big news, the bank charter, guys. This is going to be some Rocketfuel news. This is massive opportunity. What the bank charter is going to do for them, it's going to double their 2022 EBITDA projections from $220 million to like $450 million. What this is going to do for them, it's going to bring them to profitability much faster, guys. I get a lot of comments. This is the second comment I'm going to address. Kyle, the margins on SoFi are terrible. Guys, this is an early stage growth stock that just went public. Sure, the EBITDA margins right now are around 3%. Those are going to jump to 17% next year in 2022 by the end of the year. That is an amazing EBITDA margin, guys. The top companies in the world like Microsoft, Google, they have like 30 to 40% EBITDA margins right now. So we are on track to be hitting those margin projections in the next 2 years. You have to be patient and understand this is a growth stock in the early stages of growth. They're investing into their company, heavy marketing. It's going to take a little bit of time for those margins to come up. And for anybody new following the channel, I want you to realize that I'm not just pumping out these SoFi technology videos to get views, heading into the bank charter. I'm heavily invested in this company. You can see right here, I have $44,000 in my Robinhood portfolio. We got to average around $15.17. And I have another portfolio with like another $40,000 of market value in my TD Ameritrade. So I have, heavily invested in this company, close to $100,000. So I'm not just, playing the hype on this company. I'm doing my due diligence and research, and I'm not worried about short-term volatility because I'm holding this stock for the next 3 to 5 years. So this is going to be the third comment I'm addressing. You're just pumping up SoFi. You're just trying to get views. I'm investing in this company. So I'm just giving you guys deep dive, due diligence, and comparisons on what kind of opportunity I see for this company in the short term for 12 months, as well as the next 3 to 5 years. So I know a lot of people love the options, okay? We made a lot of money last year, in options, okay? 2020 was a crazy year for options. but I have not been playing as many options since that February March crash with the high growth, small caps, okay? But understand now, the market is getting more stabilized and it looks like some SPACs are coming back to life. If you want to play this massive bank charter news, you got to play it safe, okay? The reason why you need to play it safe is nobody knows when the bank charter is going to happen, okay? So as we're looking at these options, okay, as you can see, they have tons and tons of, September calls. This is where they really want to get you. The market goes cold and a lot of people lose money on the weeklies. Nobody knows when the bank charter is going to happen. I've heard October, November, December, next year. If you want to play the massive bank charter, I recommend to just bring it down, guys. Play it safe. Pay a little bit more money. You want to be buying these Decembers, these January 2022s, or these Aprils. At the shortest time frame possible. I believe the bank charter could potentially go through in 2021, okay? So if you want to play those December calls, we'll click these real quick. Stock's hovering right around 1586, so you could play the 17.5s or the 20s. These are $1, okay? If this stock does rally up to $25 plus, you're gonna make a lot of money on these options. And as you can see right now, they're priced pretty nice. $1.13, and we'll take a look at the open interest. Have moderate open interest around 1700, the 22.5s, 500. So a lot of people aren't playing these December 17th right now. If you're really bullish on the company long term, just buy the leaps. You could buy January 2023 leaps or December 15, 2023 leaps. Guys, even the 2-year leaps are pretty cheap right now. Look at the 20s. They're $5, okay? If this stock does rally to like $60, $70 in the next 2 years, you're going to make some crazy returns on these leaps. So my recommendation is just stop playing weeklies. A lot of new investors are getting burned on the weekly and monthly calls. Now, another question I'm getting is what kind of move can we see on this bank charter? Is it going to be a ridiculous move, like a double 100% move? I personally believe the bank charter news is going to be massive, and we could see a 30 to 40% move in one day on this bank charter news. This is what the big money wants to see. This is why they've been loading up, and I believe they will double down if the bank charter news comes out. Remember that massive news last week with the Affirm stock when they strike the deal with Amazon for the buy now, pay later? I believe that is some big news. I believe, potentially neck and neck with the bank charter. And we could see right here on that news, the stock was hovering around $68 plus 1% on the 1 month and had a 46% move on that news. So this just gives you an understanding of what type of move, that Amazon Affirm, partnership put out. But understand Affirm is also double the size of, Sofi right now at a 25 billion market cap. So we could see a big move on this stock, but I'm going to say personally, in my opinion, this is going to be a 30 to 40% move on the bank charter news. And guys, if you've been following the channel, I have not been reading tons and tons of articles on the Sofi stock. I give my personal opinion. I don't read these other people's opinions. I do my due diligence. When I see bearish articles, I just laugh. I don't even read them. This guy right here, Matthew Frankel, this dude is the real deal. I covered him in one of my other videos, but you need to get an understanding of who this guy is. He's been working with the Motley Fool for almost 10 years. You can see his greatest investment ever was buying Square at $11 5 years ago. Guys, that is returns of 3,000%. If you can diamond hand the Sofi stock, I'm telling you right now, in the next 5 years, you're going to see a 10x on this company. And understand, Square pulled a 30x in 5 years. So you got to stay bullish. You got to diamond hand this one through the high volatility in the market in the short term. We're going to watch another video he put out, which I really like. This is a very solid video. And I'm going to cover some things I see on the interview that I really like.
Recently completed its SPAC merger earlier this year. Sofi ended up getting something like $1 billion of cash out of the deal for growth capital. Sofi stands for social finance, and I want to share my screen real quick.
Guys, this is very important. Sometimes, we're going to reiterate things we've brought up in previous videos, but understand this is not getting priced in the type of growth that their members are accelerating.
So this is Sofi's member growth. Not only has Sofi grown its business from 704,000 members in the beginning of 2019 to almost 2.6 million members today. If you look at these blue numbers toward the bottom of the chart, this is the year-over-year growth rate. That has accelerated for 8 consecutive quarters.
8 consecutive quarters acceleration. And just because of a small guidance issue, because of Joe Biden affecting the CARES Act, student loans, stock pulls back 20%, guys. This is the time to be buying on these pullbacks. And that's what I've been saying the past 3 weeks.
So A lot of times you'll see early stage companies grow by 100% one year, then it'll slow down to 90% the next year, and so on and so on. We're not seeing that with SoFi. This is really picking up, and a big reason is they're offering more and more individual products to people.
The cross buying is insane. The more products they provide, the lower customer acquisition costs they have because they're cross selling like crazy. None of this is being priced in yet. I'm telling you that.
That are bringing more people into their ecosystem, similar to what Square is doing with the Cash App. Um, when Square decided they were going to sell Bitcoin or allow Bitcoin, a lot of people flooded into the Cash App. When Square rolled out a brokerage platform, a lot of people went into the Cash App ecosystem. Same thing's happening here. SoFi started out as a private student lender, not a giant market. Federal student loans take care of it for a lot of students. Private student loans have a lot of disadvantages over federal. They expanded into personal lending, which they've done really, really well. Other types of lending, they facilitate mortgage loans through their platform, auto loans. Now on the other side, they have the brokerage platform that allows cryptocurrency trading. It's kind of a Robinhood that's meant for longer term investors, is the best way I could describe their investment platform.
Why do you guys think I don't recommend Robinhood, guys? This is a well diversified company. Robinhood is like 80 to 90%, payment for order flow. SoFi is offering hundreds and hundreds of products. That is why their diversification is much safer than Robinhood. And Robinhood is also 3 times larger market cap than SoFi stock right now.
They prioritize things like investor education, long-term holding, things like that. The growth of products is growing even faster than their user base, which kind of shows how well this kind of cross-selling into their ecosystem is doing. Number of products has grown 123% year over year. All the numbers look fantastic. If I scroll through this whole thing, Galileo is their kind of financial technology platform that they essentially let other businesses use a part of their banking infrastructure to offer products and services to their customers. That has grown tremendously. 79 million customer accounts are used Galileo as their platform.
I'm going to do a deep dive on Galileo soon, guys. Galileo could really pay off massively in the next 5 years. It could honestly explode. It's just still in an early stage. The purchase price was only $1 billion, for Galileo. I'm saying, in a couple of years, Galileo could be worth $20 billion. Robinhood uses it. Chime uses it. There's multiple companies that are using this technology. It's for the payment processing, checking accounts, saving accounts.
Revenue's doing great. This is a profitable business on an adjusted EBITDA basis, not on an absolute basis.
Guys, you see this EBITDA right here? It just says 11 million for whatever the last quarter. This is going to grow for the year of 2022 to $450 million if they can get the bank charter to pass through. That is massive, okay? Massive EBITDA is going to be coming in next year, and I think the stock is going to explode for a triple. I got to continue to stick to my guns. I got to continue to stick to my gut on this one, on my bullish thesis. An easy triple in the next 12 months, guys. This is going to lap the NASDAQ and S&P 500 by 4 years if we can pull a triple. So stay bullish, stay diamond handing. Don't worry about the short-term volatility.
So why did the stock get hammered so much? And the answer, as you might expect for most tech companies,
that G word. I've been covering this weeks ago.
This is guidance. The guidance wasn't too impressive. The loss was
Thank you, Biden. Appreciate it. Holding us back. You've been doing a wonderful job. Congrats. Thanks.
Their quarterly loss was a lot more than investors had expected. A lot of these companies have been raising their guidance. SoFi didn't.
Guys, that CARES Act that Biden put through, that's a $40 to $50 million hit on the company, the next, 1 to 2 quarters. It's a massive hit, and that's why they couldn't accelerate guidance into the $1.1 to $1.2 billion range.
Nothing terribly concerning. A lot of it is because it's a SPAC. Recent SPAC IP, the SPAC bubble earlier this year has deflated, very much so.
That's why you continue to see my videos, SPAC versus IPO. It's all a manipulation. It's in people's brains. It's not real. These are amazing companies, guys, that I've been recommending, and SoFi is better than 90% of the IPOs.
And pretty much any company that came from a SPAC has really not done well, and SoFi is no exception. I bought shares of the SPAC when it was still IPOE before they announced it was going to be SoFi. I've bought 2 or 3 more times since, and I just bought more after this earnings.
I've been continuing to do the same thing. I just continue to buy when the stock is showing weakness. That is what you got to do, guys. So you heard it from Motley Fool, 10-year analyst, pulled a 30x on Square. Guys, he believes this is the next 10x opportunity. I continue to give you deep dive analysis, just like this gentleman here. Some of my videos are more focused on competitors. You see the massive upside potential on the SoFi stock, and I'm telling you, next year is when things really get exciting. Bank charter, Superbowl, student loans back. This is the time to be buying now. Once again, I really appreciate the support, guys. All of the videos are really exploding. You guys are showing great engagement. Be sure to like this video. Let's see if we can get this video to like 600 to 800 likes, and drop me a comment, how long you plan on holding the stock for. Do you plan on buying more SoFi? I want to hear your comments. I'm going to be commenting back to as many people as I possibly can. Once again, my name's Kyle. I hope you have a great day.